Senor Ortiz, we are live. Are you ready to do this thing, brother?
Let's do it, brother. Let's do it.
Hey, I'm not ready. I was just playing. Let's go.
Welcome to the Administrators Podcast, featuring your host, Mr. Kendrick Thomas, and my co-host, Mr. Jose Ortiz. This information is used for educational purposes only.
Hey, what it do, KTTV? This is KT, and I'm coming at you live with another episode of the Administrators Podcast. And I have my co-host in the building, Mr.
Jojo, y'all. How's it going, everybody?
Hey, what it do, y'all? We are in the building tonight. We got the, I'm gonna just listen what they say, Championship Monday, Money Mondays, Manic Mondays, all of the above. We have braved another day in education to come and bring you all a little trading information, man. So we're gonna try to get the bag up any way that we can. But before we go any further, checking in, man. How you doing tonight, brother?
Man, I'm doing good. I hope that everybody got a good rest over these past couple of weeks. We missed everybody. And now it's time to like pick up right where we left off. But doing
Right
good. I'm
where
doing
we
good,
left
man. How about yourself, KT?
Oh, look, bro, I just thought about it. This is our first time since the new
Yeah.
year, right?
Happy New Year, everybody.
Oh, Happy New Year, people. 2024 is here. Made a few resolutions, brother. Working on my goals. Already meeting some goals. I set up my first men's event for January 26th. We'll have about 30 guys, 40 guys. We tie it all to biblical scriptures, kind of talking about our first one, be talking about brotherhood and unity, and why it's important that we show up each week for those meetings. So looking forward to that. Shout out to my boy John. We're going to be using his gym because he'll be part. He said sometimes he can make it because we did it a lot, but John said, man, I can't do everything, right? So I had to step in. I said, well, I got you, brother. I'm gonna stand in the gap. And so we about to get it going, man. So looking forward to that for the new year. But that's it, man. You had any New Year resolutions?
Yeah, man, just gonna lose some weight. We're gonna see how that goes.
Hey,
Be healthy.
look, man. Are you gonna do the marathon?
I am Sunday, baby. Half marathon number 8.
Number 8, man. Now look, I remember one year we always joked, man. That boy Jose was gonna run across the field, get picked up in an Uber, and then get dropped off about a mile away from the finish line, man. Trying to get his time better. Hey, man, you ain't gonna try that this year, are you, bro?
I tell you what, though, not wasting too much time, but that last year was pretty close to me being almost last. But I finished, got my medal, and I'm back at it this year. So we're gonna see what happens.
Hey, man, look, man. Better to get to the end, bro, than to not, man. So big shouts out to you, man. We're gonna be looking for that medal on our next episode, man. Come on back, brother. Hey, all right, y'all. Now let's just jump into the work tonight. Another episode of Administrators Podcast tonight. We did have our guest Zeek was gonna come on, but bad storms in Houston, so Zeek does not have power. Couldn't get his Wi-Fi going. So what we'll do, January 22nd, we have already agreed that he will be in the building. So we'll kind of run it from there. So tonight, we'll kind of jump back into our usual, going through our heat checks, our platform probing, and then we'll finish looking at these options, kind of talk about our Greeks tonight, because we want to make sure that regardless of the interview or whatever, we keep on giving y'all that heat because the money don't stop. Man. All right, man. So I guess the first thing we'll do, man, let's get into some of this news, man. So first thing I want to share with us tonight, we have Apple. And I don't know if you've been looking at any of the information that we've been putting out there, if you are following Apple stock for your own investing, but Apple logs the worst start of the year since 1982, man. 1982. That's letting you know times is changing. The stock erases 6% amid brewing troubles. And so just to sum up what's going on with Apple, and Jose, if I miss anything, please jump in. For the last few quarters, Apple has not grown really as far as sales. Matter of fact, sometimes sales are declining on some of the phones. Still struggling with the VR sets. And also, China is now making things hard for Apple as far as their selling, as far as their chips. So I think things is getting a little tough on Apple, man. Did I miss anything as far as what's wrong with it?
No, that's absolutely right. And a lot of people out there are just stressing that its price to, everything, that its valuations are too high. And so with that comes, the troubles that you were just speaking of. China in particular, if they can figure out a way to get past that, then we could, be somewhere. I think all this AI hype got Apple's their market cap a little high than what their earnings might be. But with all that being said, I'm still a firm believer in Apple, and I if you followed us in the previous podcast, you also knew and heard that Apple was on the rise, and that sooner or later we were going to have a pullback. And when you start the year at a 6% pullback, that could be, when you don't know what's happening, it's always good, like we said before, do that research. A good healthy pullback is 10%. If we keep declining a little bit, Apple could eventually hit that early. But like I told y'all before, with all the news and with everything going on, you got to know where you want to put your money. And so for me, it's still a blue chip stock. And like KT's been harping on since day one, don't you got to understand, is the company, what are they doing? What are they going to do to get through these tough times? Are they, how good is this company? And this isn't a company that's your regular, Joe off the streets. This is a very, very reputable company who can get through some of these changes and face this turbulent time and get past it. And so I'm still a believer in Apple. So,
hey, still believing, man. So let's look into a little news. Like you said, it's 6% down from its close of 192.50. I want to say today started maybe at 180, ended today maybe around 183, 184, if I'm not mistaken. What's worse is starting the year with the first 4 trading sessions in the red. So the shares of the tech juggernaut have washed out roughly $200 billion in the time span as Apple battles the series. Yeah, they have got a few downgrades this week too. I know that's what made them drop a little bit. That's how we got back to these 181s and 183s. So the biggest thing about Apple is it's losing its status as the world's most expensive company with that pace of declining valuation. There we go. Microsoft could soon swoop in and take the top spot. So the 2 ended Friday session with the valuation of 2.73 trillion, roughly 90 billion behind Apple. Dude, how do you get a valuation of 2.73 trillion, bro?
People got to believe in you. And I'm gonna say this, KT, if you are Apple or Apple believers and Apple buyers, and you see that Microsoft is the stock behind you, I would just keep, looking forward, because I wouldn't worry about Microsoft, because that is also a tech giant and someone, who's out there, trying to make a name for themselves in this new AI spread, in this new data, all this information out there. So if you're talking about Microsoft catching Apple, I wouldn't necessarily be worried about that if you're Apple buyers, because both are reputable companies that, it's not like we got some, Joes off the street that, that are making these high-tech devices that no one knows about now. All of a sudden, I'm not saying it could never happen, but as of right now, you're talking about the 2 tech giants of the
giants. Yeah, you're right about that one. Definitely tech giants of the industry, man. 1 and 2. So I know looking at a lot of that. I will say, everybody, if you can, take a look at Nvidia. So Nvidia was having trouble backing up. And so for a long time, they could not break 500, right? I would let them go up to like 495, 498, 500. Then I was short it. Next thing you know, I'm getting it going. Now I want to say Nvidia hit 520 today. Maybe about 520. And so what they said was
Nvidia's at 524 today.
524. My God. And what's going on is they said, because they were on the earnings call, they said that China, they're going to be struggling because China has kind of changed up the way that they're letting the chips come in, or the way they're manufacturing chips over there. So what does Nvidia do? They say we're going to make chips specifically China focused. And what did they do? Ran up the bag. My God, man. So yeah, if you have not, go in and check on that. And right behind them is AMD. I think AMD is on their way to 150. Dude, I think about those days when AMD was like $88, $90, bro. Gosh, man, I remember when Nvidia, bro, was 140, man. So patience, people. Just putting money there. Blue chip stock, safe places.
And you know what? Let me add this, KT. You know, you were talking about those numbers for Nvidia. We'll put it to you like this: Nvidia was up $32 today, so almost a 7% increase. And the other thing with Nvidia, because you got all these different tech-related stocks or semiconductors that are all blended together. One runs, most of them will run together. It's like a flock. With that, AMD was up $7.50 today. You're talking about almost a 6% increase. If you've been following us on the podcast and on social media, you know that we were heavy into AMD. If you were like us, you sold whatever profits you had. AMD had a pullback, a really nice pullback. If you stayed in it, you know, if you kept some runners like I did, you saw a decline. But when you added to that position last week, like I did, and then you have a good run today, that's where you make your money, y'all. You know, you buy pullbacks here and there, but you got to make sure that when you're in the green, you go and you get rid of it. You got to get back in, because they will. It goes up and it goes down, and so we'll continue to play. AMD's been one of our stocks that we do options all the time with. AMD, Nvidia, Apple, Microsoft. Like KT was saying, he shorted Nvidia, which means he bought puts back in a couple of weeks ago or last week. So you got to know, you got to figure things out when it comes to the market gets hot. You know, we've been saying with these heat checks, and so when you see today's heat check, it might be on the good side. But if you looked at it during the 2 weeks that we were off, it was bloody red when the year started.
Red. So, yeah, man. Hey, that's what made me think about something. I want shout out to everybody who be so excited to trade when they out of school. You like, man, I'm about to break down. I'm in front of the market all day, baby. And then you realize we out of school because it's a holiday, which means most of the people who move the market, it's a holiday for them too. They taking off. So then we'll have no volume. We just sit there and look. So really, man, the biggest part is, I think now that I'm learning it, I think I have to say today is a day for me that's going to be good. Or today is a day where I get to relax and really take a vacation, because there's no reason to trade. So that's what we'll look at, man. But I think that'll do it for the news section. What we'll do, take a quick break. Time to get into this heat check, man. We'll be right back.
You see the drippy, I'm fitted up. Hop in my car and the giddy up. Secure the bag, yeah, I get the bus. Pick it up, pick it up, pick it up. You see the drippy, I'm fitted up. Hop in my car and the...
All right, well, we are back. Heat check. All right, y'all, let's get into a heat check here. I'm going to stop that screen and then I'm going to share. I guess we'll go with let's go with the map first. Oh my God. Look at this, people. Are we looking? Ooh, money being made round here. Look at this. And I'm not going to lie to y'all. I had stops on a lot of my tech last week. And so honestly, I do not have any positions in any of this. We talking about, dude, I took profits. I'm sorry, y'all. I took profits. And so now I gotta see what all this is going to do. Let's see if it's gonna come back. But look where we at, y'all. Microsoft, Nvidia, 6.4 today. AMD, look at this entire sector. These are semiconductors sector, right? We got Qualcomm, 1.6. So really looking for this because last week Qualcomm hit 146. So there may be a little bit. I may come in and try to see how we're gonna react tomorrow. I'm really kind of keeping it kosher because we got CPI coming Thursday. So I want to go too heavy. That's when I think I'll jump back in after this CPI. But I'm getting kind of afraid, Jose. Oh man, let's see over here. We got our technology. So we got the infrastructure software. Oracle, man, Oracle still doing their thing, huh, man?
Yeah, they are, man. Wow.
Apple, look, yeah, man, 2.3, and we know Adobe is like 400 share, 580. So 2%, you made some money today if you was there. Now let's go over here. Look at what's running. Where could the opportunities be? Dun dun dun. Look at that Boeing, y'all. Look, man, we gotta talk about this Boeing, man. So with the Boeing, the people were on the plane.
Yeah.
And the door opened. like the door just fell off the plane, bro. So when you think about the heat check and you look over here, I don't know what's going on with this, but that's how you lose 8%. When you're on a plane and the door just pops open, that's it right there. So we got a little red in here, but if you can look at the rest of
KT, I'll add to that by saying that absolutely the door fell off, the bottom dropped out of Boeing, but did the company go bankrupt? No, they didn't. So
they didn't.
When I saw that opportunity at $20 down, you best believe it, I took me some Boeing calls for March. So, I mean, sometimes you get opportunities like that because Boeing has been on a steady increase over the past year. And, you know, you are grateful that nothing happened to those people on that plane, or I think nothing happened to those people on that plane.
No, minor injuries.
Yeah, but you know, when you think about in the grand scheme of things, you know, they're going to be right back at it trying to figure out why that door broke. So, you know, I see them getting past that, and sometimes the market overreacts to any type of good or bad news. You know, so case in point. Now, the one red sector on there that I see that you know you might not know how to play, or is that oil and gas, that energy, because we don't know what's going on over there. We don't know what they're trying to do. We don't know what OPEC and them are trying to do now. They've had some grumblings over the weekend. It's a little frightening, right? If you think about it from a buying and selling aspect, it's a little frightening to see them drop in the red today. With no particular news, we're still around $80 a barrel of oil. So once that starts to go, you know, either way, where you can tell that the energy is trying to make a comeback, then I would look into that. But right now,
and I was able to, able to pick up for Exxon, right? I was able to pick up probably about 25 more shares today. Just getting ready to see what this gonna do. I am heavily invested into Oxy as well. So I think this went down to 57. So I jumped in. Now, Oxy is just my Warren Buffett play. I'm just like, man, he owns. So I said, I'm gonna keep going for this. I'm thinking 118, 117, and that'll be the target for this. So I'll just keep buying in my buy zone. But you best believe if this hits 97.50, the stop loss will be activated and we will not lose any more than that. So we're just gonna keep on going, but the stop loss is in place. I think for Oxy, I got a $55 stop loss. So we'll just see what's happening here, people. We are not going to play. If it get crazy, remember, risk management, right? So that's why I can tell you. But look over here. JPM down. Bank of America down. Ooh, so just going through, man. This is how you can kind of look and see where are the buying opportunities, right? So we got a few more places down here. What's this? Industrials. I will tell you one thing that I've been looking at, man, is Zima shipping. And so I don't know if you had a chance to look at that, man, but that Zima shipping went all the way down to $6. And I want to say now it's back up to almost $12, $13. So I had some in the account. It got stopped out for a loss. And so then I came back. Look at this. We got Uber. Uber still running like a champ over here. Man, come on, man. So that's it. Now, what I want us to do is remember what I said. This is our S&P heat map. What it does is you want to look at this when you're looking at buying opportunities because we combine this with our, what's coming up next? Hold on, wait a minute. Let me get to it. Our fear and greed index. Woo! Okay, so this is the way I want us to look at this. Extreme buy, hold, sell. You better get it out your hands now, people. Extreme greed. So right now we're kind of teetering that line. Remember what I said? Each week we're kind of going back and forth. Not over here, but it's either we right here or here. People are buying now. So you look at the heat map. It's getting very, very, very bought. Beginning of the year coming. So they say we do for a pullback when you look at our bigger time frame. So let's just see what happens. But when you see the greed over here, that's just saying maybe sell. Start looking and taking profits, anything like that, because we don't know. But once we get over here, this is the reason why I started putting those stop loss and selling some of that, because when we got over here to the extreme, man, I started taking profits, man. So that's just another section, man. Anything you got to add on to that one, Jose?
If you're long term, you want to pick and choose when you buy, sell because you're holding it. But if you're short term, options, you got to make sure that once you start getting in the green, if your expiration dates are not long, you have to start to get out, because I think we closed many of our January positions. And then last week and the week before, we started opening February and March and June positions. And so like right now, some of those February positions might be a little iffy because we could see today could have been a dead cat bounce where the market was beat up since the beginning of the year. We had 5 or so days trading that, were in the red. And so today we bounced because it was just, that happens. But the overall momentum could still be trying to get into a downtrend. So I'm looking at my February positions carefully right now. And then I'm also looking at those March positions that I want to look at and open up and even add to, because I think the time frame is good enough for that.
Yeah, man. Yeah. So just to put this into play, for anybody who's wondering what this is, this tool gauges investor sentiment on a scale from extreme fear to extreme greed. And so it's crucial that we understand this because it can influence our trading behavior. It almost should influence our trading behavior. When the index is in extreme fear territory, that's when we're looking for buying opportunities, right? Because we don't want to be doing what everybody else doing. I said before, when we see that red, like when the mall has a sale, we run to it, right? When our favorite store has a sale, but when the market goes on sale, everybody's scared, we pulling back. Definitely not the time to pull back. That's when we looking for buying opportunities. But when it's over in extreme greed, that's when we're looking to get off a little bit of that, because you've been holding since over here. And so nobody ever went broke
taking profits.
taking profit. I love it, man. I love it. All right. Next we got let's go over here. Let's see here. And I want us to just be able to put it all together because this is our last piece when we're doing our heat check. Look at the VIX. My God, man. So VIX is going down. And so I think as long as people are buying and our VIX is down here, we're in a good spot, man. We're in a good spot because people are not that scared. They just greedy, right? So the money is moving, but people are not afraid of what they're doing with their money, putting the money out there. So as long as this go, I feel safe, making a few purchases, man. So we coming down on the VIX versus going up. But open was $14. So it did get kind of scary. Once we get to 15 and up, then I think you really got to start watching that VIX to see what's happening, man. What you got on that, Jose?
No, I just think, you gotta, if you're looking, long term, short term, that VIX, something to keep an eye on, play those calls. There's options that deal with that particular ETF for the VIX. Start hedging because, you get into these cycles where the market goes up, market goes down, and if you're hedged with either way, then that's a good. Just like all the people who had SQQ, good call on that, KT, because last week and the week before, we saw a little bit of a dip, and so that SQQ, depending on how many shares you had, made some money for some people. So, but it was coming though, and it could be continuing. We really have to pay attention to this VIX to see where that index is going, to see what the people think. But we were riding highs, and we kept talking about pullbacks, and then it came, and hopefully some of y'all were ready, and y'all got out of some positions that were relatively short, and hopefully now we can continue to get in long term or longer than what we're normally getting into.
Yeah, man. We got core inflation data coming out Thursday. I think that's really going to tell the tale. People thinking it's going to come in a little hotter than it should. They're saying that they said they may cut rates, but I think the market has overbought into that fact. And so we may come up for a rude awakening this week. And so I think everybody is running. Wednesday, we may see a decline because people are taking profits because they are not holding into that CPI data. So that could be an inclination of things to get ready to come. But there you have it. That's our journey of connecting the VIX, the Fear and Greed Index, and the heat map. Just remember, those tools are like a puzzle. And so each provides its unique perspective in the market. So just keep staying tuned as we keep exploring those advanced strategies. And then I want to help us kind of deepen our understanding, because if we can learn to put those three pieces together in themselves, that kind of tell us where to go with the money. That kind of tell us what we can expect out the market. But you have to know how to weave all of those in and know what they're for to be able to get that bag out of there. So make sure y'all stay tuned. We'll kind of get this heat check going because it's very important to know what's going on. If you're seeing all that green out there, you kind of know. But then where are your buying opportunities? I see that oil is red. We know oil comes closer when you think about spring break, when you start thinking about the summer times, when people are really using their gasoline, really doing their traveling. That's when we can hit. So right now we just buying, right? You think about Exxon is $99. Exxon may gonna get up to maybe 118, 120. And we just know that for a specific, because we've been doing this thing. So just making sure that we're looking at those opportunities and being able to use that heat map and all of those pieces to go in, man. Man, I think that's it on the heat check, man. Anything before we close that section out?
No, man, I'm just excited to continue to talk about these options.
Hey, y'all know it. So what we'll do, let's take another quick break. When we come back, You know I got the section for Jose, man. Don't even play no games, man. We'll be right back.
You see the drippy, I'm fitted up. Hop in my car and the giddy up. Secure the bag, yeah, I get the bus. Pick it up, pick it up, pick it up. You see the drippy, I'm fitted up. Hop in my car and the
If you have not, make sure you get to kttv.com, y'all. We got merch. Just dropped a new blog on the website as well, man. So y'all go check out some of the literature over there. Make sure you grab your t-shirts, man. We got the custom shirts. Maybe you got something. Big shouts out today to my boy Derek Muhammad, Smarten Up Leadership Conference. So just wanted to rep somebody else today. This was, man, we all in this gang working with these young men in the schoolhouse. And so he invited me out to the conference. He had let me bring about 75 boys from A-Leaf. And when I tell you, it was going down at that conference, so I had to kind of represent for my boy tonight. But now, Jose, you ready to do this thing, man?
I am. Let's do it.
Let's do it. Trading Insights with Ortiz, man. Look, man, I guess what we'll do, I don't know how you want to do it, but kind of give us a little quick recap. Just tell me when to switch them out. Tonight, we're going back to options, understanding the basics, man. So what you got for us, brother?
All right. So, before we move on, anybody out there keeping up with this game, it is 17-3 Michigan. Go Blue.
Hey. Oh.
So, and they are driving again in Washington territory. Oh,
it's terrible.
So anyway, welcome back, everybody. Hope everybody had a restful break. This is options. What we talked about the last time before is like basically what the basic concepts that were with options. I just want to make sure that everybody understands that options are, instruments that give you the right to purchase contracts, and you get to set the price that you want them to get to. And just remember that these options have expiration dates. It doesn't get any simpler than you can bet on them going up, or you can get them to go down. So when you go up with the call, when you buy options that you want them to go up, those are called calls. And then when you buy options where you want them to go down, those are called puts. So calls, puts. So basically, there you go. So we talked about that they have ticker symbol, strike price, whether you want them to go up or down, the expiration date, and then the premium is what you pay for that actual option. When it comes to all that tied together, the strike price is the price that you wanted to hit. It is that target price that you have that you see on that particular option. You want to get in there and decide whether you want that to continue to go up or go down. So you have to know that going into when you start to buy it. Do you want it to go up or do you want it to go down? Then we talked about expiration date. That's important. One of the things that I wanted to talk about tonight is that, and this goes great with the overall market conditions being up and down. If you know that you bought expiration dates that are a month out, even 2 months out, and you got this market that's going up and you got calls and you're in the green and, you've made 20% or higher, 50%, 100%, don't be afraid to pull the trigger and sell them. You can sell them whenever because the market will go down and then you'll end up losing that money because as they continue to fluctuate, what we'll see in a few minutes is that volatility plays an impact on this premium. When that volatility is up and down, up and down, up and down, those premiums go up, and you'll see that as you continue to get into that option journey. Real quick, so Microsoft at that time was $369.85. So when you do calls or when you do puts, you'll see the ticker symbol, the price that you want it to get to, and then whether it's a call or a put. And then you'll see the expiration date. always this is what it's going to look like, whether you buy a call or whether you buy a put. These are the terms to see. So when buying options, like we've been talking about, some people day trade them. Most options have a weekly or weekly expiration dates where they have 7 days in between their different calls, somewhat like SPY and some of your ones that go with the VIX, QQQs, all those ETFs usually have daily ones where you can 1 day till day trade or 1 day till expiration. But I try to stay away from those. KT, does well with them. Then you have your monthly options, which are the ones that I like to get into. And then you have leaps where you have a year or 6 months. And just recently we bought leaps for June, and we bought some Apple calls for January 2025. So we have gotten into.
Hey, hold on before you go. Before you go, when you think about them leaps, I'm gonna just give my sleeper out right now. I'm thinking about getting a $25 Chewy leap.
Oh,
Chewy right now is $20.50, I think.
oh.
Get that $25 Chewy leap. All right, y'all. I just wanted to throw that in there just in case somebody.
CHWY Chewy.
Hey, yeah, keep that thing, man.
So, like we've been saying, sell whenever your profits are there, whenever your profits are green. Try to avoid the losses like you can. So now, understanding all that about the options, calls, puts, expiration dates, let's talk about how to get these options and what the technical terms mean. So we're going to go into what we call the Greeks. Every options comes with a set of Greeks, and these there are risk measures that help you understand the price of an option and that when it responds to certain things that happen. So here we go. So the Greeks that we have delta, theta, gamma, vega, and then we have what we call the RHO. So without further ado, our first one, let's get into this delta. So our delta, it's going to tell you how much the option will increase for every dollar that the underlying stock increases. For example, if we got a delta of around 25 cents, we know to multiply that by 100, so it's $25. So for every dollar that stock goes up, your delta is at 25, so it will go up $25 for every dollar. So if you're sitting with a Microsoft call that your delta is 25 and it goes up $5, you just made $125.
To the moon. Oh.
And think about that if you had one share of Microsoft and it moved $5, you would only make $5. So $5. Thinking about that delta's important because it does what? It helps you understand how much money that option's going to make for every dollar that the actual stock increases. Our next one, this one's important because theta tells you how much it will decrease every day. Not if the stock goes up or not if the stock goes down. Every day, every option has a time decay. A time decay simply means that you lose money for every day that you hold it. Therefore, the closer you are to your expiration date, the more money you will lose. We've been in calls where we have a week before expiration, and that theta is 54 cents, which would come out to $54. That is a lot of theta for a week out option. So that is why it's important. If you do 1 day till expirations, if you do 2 day till expirations, if you do a week out, that you look at that theta and that the minute that it makes money for you or loses money, sell it. Because if you're day trading and that is your sole purpose of day trading options, do not hold them when they're that short on the expiration. So, like I said, to recap that part, theta is the amount of money that you lose every day for holding it. And yes, you will lose money every day because every option has a time decay. Now, that time decay does not have anything to do with the price. That money is going to lose. And so the lower your theta, the better off you are. However, just play devil's advocate here. if you do buy options with a lower theta, that usually means that your call is really out of the money, or you have a really, really long-term call. We're talking about months,
Yeah.
Out. And that's, you have to make sure that that's what you understand. And when I say out of the money, that means it has a long way to go to hit that target or strike price. All right, our next
Yeah.
one.
Now I got a question on this one here, and it'll just be for everybody else. Let's say, for instance, my delta $54. I moved up $5. I just made $100 some dollars, but I hold it overnight. Does that money go away, or how do I work that theta in? Like, how's that going to show up?
So the money that you got from that delta does stay, and then the next day when it comes over, you lose that theta right when the market opens. So that option is down that theta once the market opens. But that money that you made from the delta does not leave you. However, if the stock goes down, that same delta will tell you what you'll lose as well. So I forgot to say that delta does work both ways. So if that stock goes down $2, then you lose $2 times whatever that delta is. So just to make sure we understand that as well. Hello? And I believe we have lost Kendrick. So delta and theta are the two that we've talked about. So delta is the money that you can make when it goes up, but it's also the money that you can lose when it goes down. So when you're thinking about a delta, and then your underlying stock goes up and down, that is what you're going to be worried and thinking about. Now, theta, on the other hand, is when you have that time decay every day. So to go back to what KT was saying, if you made that money on that delta, that money doesn't go away unless the stock goes down the next day. So if it was a $25 delta and you made $5 on the stock and you made 125, then if it goes down the next day, you lose that 25 again. But the delta could fluctuate daily too, depending on where the actual price is of that option. And then theta is just time decay that you lose every day. So that's the big thing. But you do want to make sure that you look at both of those. One of the ones that we look at as well that sometimes can make or break you is gamma. It's the rate of the options delta for every dollar. So if you have a high gamma, it's more sensitive to any movement. And when we're talking about high, we're not talking about 10, 20. We're talking about 0 to 1. So if you have a 1 as a gamma, then that fluctuation is going to be intense when it comes to any dollar movement of that particular stock. Now, that's good if it goes up, but it could be bad if the stock makes a move down. And so you always want to be sure that you look at that and try to get it as close to that 0 as possible, staying away because it's in decimals. And so you want that rate of change to be minimal.
Yeah. I just think about that Boeing. Like I said today, man, we talking about hundreds of dollars in a matter of seconds, right? No more than 2 minutes. It was a $300 profit because that gamma was so close and it made it move so hard. So most definitely understand what you're saying, man.
Vega, it measures the rate of change in the options delta in response to the dollar movement again. But this time, it is related to implied volatility. So again, your range is 0 to 1. That implied volatility, man, will kill you if you don't watch it. That you want this to be as close to 0 as well. So when it comes to the Vega and the one, what was, I forgot the name of the one before, where you want the gamma, you want them to be as close to 0 as possible, because that way, whether you want to make a lot of money or not, you still want it as close to 0 because anything can happen in the world of options. So
Ooh,
now
get
we
it.
go into what we call the RHO. And this is the change in the price on a 1 percentage point change in interest rates. We've been talking about all these interest rates. We've been talking about this inflation data. Got CPI coming out Thursday. That RHO affects your option every day. And so when it comes to how it's reflected and calculated, it's just a certain percentage, 1%, and it goes up and down based on the percentage points of the actual market, and whatever rates that they have. So there will be some change when they start to lower those rates. So we could have a positive impact on the RHO for a lot of these underlying stocks and these options.
Mhm.
But you have to be careful as well, because if the change is drastic, it could influence it in a negative way, because you don't want all that movement. You ideally, when you get into options or any stock market activity, you want relatively easy ups and easy downs.
Hmm.
That's what you want. In the past couple of years, there's been a lot of factors out there where that's not the case, and you're going up, and then bam, you got a hard down, or you got
Woo.
this elevated rush, um, that people don't understand where it's coming from. In general, if you looked at the overall market over the past year, you would say, wow, why are all these people buying? You know, why were they buying last year? We all know that once COVID ended, we know why they bought then. But now you're thinking about everybody who got in last year and was like, wow, why is this market going up? So eventually, if you look at last year's up and down, we had a really big downfall before we had a steady increase after October. And so we're due for a little bit of a sell off. So that's why these terms are important when it comes to your options buying. Um,
Most definitely.
so when you think about options and you think about, basically, these are some terms that or that we talked about when it comes just to the overall uh, buying stocks in the market. But you want to get familiar with bid. That is a bid is simply the lowest point right now that someone is paying for it. The ask is what someone is asking, and it's usually high, of what they want to sell it. So you got to pick a number in between your bid and in between your ask. You want to pick a middle ground, whether you're buying options or stocks. That's what you want. You always want to look at the volume, because if it doesn't move a lot, any little movement in the price will fluctuate it up or down. So you want to have a steady volume. We like to look at stocks in general that have over $1 million in volume every day. We like to look at anything that has anything from 500 to 1,000 and up when it comes to options. If you got an option that's moving 1K a day, that's a good sign. Your open interest in options, if a lot of people own the stock, that is a great thing for you. And then our implied volatility, and then the Greeks. Now I'm going to get into the open interest and that implied volatility, I believe, on the next. So
Okay.
anything
I
you want
just
to
want
add
to
to
add
that?
one thing quick. When you think about that bid and that ask, you got to remember with options, they're always going to the next person, right? So either you're buying an option from someone or you're selling that option to someone. And so that's why when you think about those options that expire on that same day you buy them, at the end of the day, with the option that expires in 30 minutes, who's going to buy it, right? So now you may have went up, but now you have nobody to sell it to because it's about to expire. So you always got to think about those things as you looking. It's always good to give yourself that next day. So if anything happened, because yeah, that low price may be the bid, but that ask price may be a little higher. And so you always want to kind of look at, okay, thinking I'm selling this to someone. Let me make sure I get out enough time because no one will buy an expiring option unless they plan on doing something crazy with it. You just try to take the profits. All
Yeah,
right.
amen to that. Okay, volume, like I said, indicates the number of contracts that have been traded for during a specific time, usually every day. Same thing with stocks. The more volume we have, the better. The The next one is the implied volatility or open interest, like KT was
Oh,
saying.
well, one more thing with that volume, real quick. Remember what I just said earlier. I always told Jose, when man, we out of school, we're about to go. It's the holiday. Our money is not enough to move the stock market, right? And so the thing is, when it's those holidays, when it's Christmas, when it's Thanksgiving, the people who do move the market are on vacation. And so then that's when you may have $1 move, a $2 move for that whole trading week, but you may never get like the Nvidia today went $30. If there's low volume, that does not happen, right? So that's why that volume is so important when we're looking at those holidays, because if there's not a lot of volume, there probably won't be a lot of movement, and that's how you get sideways trading, and then that's always potentials to make bad moves. So always be aware of that volume.
Especially and volume is easy to see. You don't have to open up every single call or put that you get on your screen. When you look at the overall volume of that particular stock that you were interested in, if it's under 1 million, stay away. If we are at 9 a.m. and you see that it's already in the millions, that could be a good indication. Yeah. But you want to wait. Good time if you are buying and selling in relatively short periods of time. You want to let that market settle between 8:30 and 9 o'clock. A lot of day traders who do day trading trade between 9 and 10, and they're done for the day. Some of us with work, it's hard to do. So you want to come look at it at the end of the day, like I do, and say like, okay, what was down today? Let me carry this for a couple of weeks or a month or so. And so I look in the morning. Periodically, I might look at the day if my time allows to see if there's anything worth getting into real quick, or holding or adding to what I already have. And then by the end of the day, I come back just to double check that. Looking at that open interest, like we were saying, it's basically just the liquidity of that particular option. How many people own this? If 1,000 people own it, it might be a good thing. So anything over 1,000 for me is a good particular move for that particular option.
Most definitely.
The big one, implied volatility. Yeah. So when that market goes up and down, it's going to fluctuate everything. And that premium, which is the price you pay on an option, is going to fluctuate when that volatility increases. So, rule of thumb, when you are looking at buying and you see what the IV percentage is, implied volatility is IV. We'll show you in a minute. When you look at that, you're looking at between 30 to 40%. That anything over 40% is going to be extremely volatile, and anything under 30%, like KT was saying, isn't going to make a lot of difference. And so you want it to be in the range, 30 to 40. I like 35. I don't know why I stuck on that number, but if I see it at 35, I like to buy it, unless I'm dead set on a particular expiration date that is months away. Then that doesn't matter, because if it's months away, whatever that price action is every day, it won't have a big effect on it. Just remember that too. When you buy leaps for 6 months out, a year out, unless you got a solid $10 move, your option is pretty safe either way, which is why I like to go long term when it comes to calls or puts. So now, go ahead.
I just want to say with the IV, this is something where we say earnings, right? We know it's a company that's done good, like Tesla, right? We say, oh man, Tesla's did numbers, they met all their deliveries. I know they're going to kill their earnings. The stock is going to go up. But not understanding implied volatility, this is when the stock moves by $10, but your option contract moves very little, because what happened was the IV crush came in. Now the number is very low, and then the money does not flow the way it should.
Or you lose money.
Oh,
been there.
Yes.
Hey. Been there where you are
so
excited.
Look at that.
Microsoft, case in point, last year, earnings hit. Microsoft was up $30 per share, but its options were in the garbage because of
I
that
be
implied
crushed.
volatility. And so that
Yes,
happens. So it's
Mm,
difficult playing earnings. So,
yes, sir.
we kind of lump these together, KT. I'm just going to go ahead and get into that profile probing. We're going to
Okay.
look at some AMD real quick.
Okay.
Everybody uses their phone. So this is what you see when you go in and you do a search for AMD and you want to buy some options. If you look at it, there it is, AMD, you got the price. And at the bottom right-hand corner, it says trade. So because we have options approved in our account, that's why it says trade. It doesn't say buy or sell because
Mm-hmm.
we can trade it and we can get options. So if you go out there, get that applied and make that happen for yourself. All right, AMD, you want it to go up? That's a call. The next one, do you want it to go down? That's a put. All right. Does everybody see the dates at the top? Those are all the expiration dates at that time when this video was created that AMD had. So now let's take a look at a particular string of calls. We looked at that January 12th, but if you can see at the top, there's a January 5th, 12th, 19th. All of those are a week out, like we talked about earlier, a week out. Each one is a week between calls. And so you have your January 12th call. And at the time, the market was closed, so it didn't really show up all the numbers for me. So as you can see, we want to buy an AMD call because we want the price to go up. If you look at the top, buy is highlighted and call is highlighted because I want it to go up. In the middle of the screen, you see all the different options of all the different calls that AMD has. And if you can see at the bottom, it tells you what each price is currently. And at that time, it was 139. Next, here are the Greeks. At the bottom, on Robinhood, it actually tells you what the Greeks, where they are. Now, when it comes to these Greeks and it comes to what we talked about, for me in particular, I look at the delta and the theta. Those are the first two that I hone in on. After I've identified my strike price, because I know where I want it to hit, I look at those two. And then you can see your bid and your ask at the top. The bid, remember, is the low point, and then the ask is the highest. You kind of like want to get in the middle. And then you also see the volume and the open interest. And on the next screen, I'll show you that again, where if you look right, go back, I'm sorry. Right in the middle, you have your volume of 57. So that particular call is being traded 57 times on that day, and 601 people own that particular option right now.
Mm-hmm.
So there you go, a quick little breakdown on Robinhood of buying a call where you get to see all the delta. You see the Greeks, you see the open interest, you see the volume. Oh, and I forgot to show you also the implied volatility is at the top right underneath where it says ask. I'm sorry.
40%.
And that implied volatility is 40%. So for me, that would have been a good call to get. And it's a nice price. 79 times 100, $79. Not a bad call for at that particular moment, which would have been at least 20 days out. So,
man. Yes, sir.
Going back.
We got about 1 minute left.
All right, there you look. There it is. You look at your price, your volume, your time frame, candlesticks, and get familiar with the line and bar charts. And these are some things that you'll get familiar with on your own. And we'll also start introducing some of these in our website and on the podcast.
Hey, man, that is it. Big shouts out to Jose, man. Look, y'all, we've been through it. We got through the slide. We talked a lot about these options. We will skip the platform program because I wanted us to get through this so that way people can be able to go back and kind of do a playback on it, kind of look at some of the things we talked about. Because as we jump into now looking at more of our charting, looking at more of our candlestick patterns, everything that we look at through TradingView, this is what you can go back to and reference as we get ready to go through everything. So I kind of wanted to finish that up before we pushed anything this week. But we are now at 59 minutes. And I told y'all we like to keep this thing to a good hour, respecting everybody's time. And so, man, kind of quiet today, no comments. So I think we can get to roll this thing, Jose. Any last words before we close out?
17-10 right now, Michigan.
Oh, look at it. See, we're right on time, man. So look, y'all. Today was really all about these options, kind of getting back into looking into our heat check. I just really wanted us to get that full PowerPoint out to be able to share with you guys. So between this episode, last episode, make sure that you go back, kind of gear up on the options, because it's almost like the pullback car, right? We just pull back from those first episodes to when we got technical to now. We've gave you all of the rundown. Let's get ready to move forward. Let's get ready to get the bag in 2024. We're going 100K, man. We're going to do 100K this year, man. So I hope y'all ready for us.
Yeah, we will.
Anything else? I think that's going to do it for us, man.
Make sure you follow us on that Instagram.
Follow us, and I thank y'all. This is KT for KTTV signing out with my co-host,
JoJo. All right.
Oh, come on, man. 100.
This is Darnell with Broadcast Houston.
This is Dr. Tamara Beckford.
Hey, this is Candace.
This is London Underwood.
This is Kirsten Bass with Inner City Greens, and you're watching.
Y'all are now tuned in to
KTTV.
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 KT.